Bulgaria to adopt the euro in 2026, economic impacts and inflation warning. Bulgaria is poised to become the 21st member of the eurozone, with the European Commission and the Central Bank formally approving its adoption of the euro as its official currency starting January 1st, 2026. As the country prepares for the transition from the Bulgarian lev to the euro, concerns about potential inflationary pressures are mounting, drawing comparisons to past euro adoptions, such as Ireland's experience over the last 25 years. Bulgaria's path to euro adoption. Bulgaria, which joined the EU in 2007, has long committed to adopting the euro and its currency, the lev, pegged to the euro at a fixed exchange rate of €1 to 1.595 Belgian currency since 1999 under a currency board arrangement. However, public sentiment remains divided, with a recent Eurobarometer poll showing 50% of Bulgarians opposing the euro due to fears of price increases, a concern amplified by Bulgaria's status as EU's poorest member state. Inflation risks in Bulgaria's euro transition. The transition to the euro is likely to introduce inflationary pressures on Bulgaria, particularly in the short term. Experts point to potential price rounding and psychological pricing adjustments where business may increase prices. So, products priced at 1.8 lev becoming now 0.99 euro to align with consumer perceptions. Suspicions have been raised of statistical manipulation to meet eurozone requirements. Inflation is projected to rise to 3.9% by the end of 2005 and moderate to 3% in 2025, driven by restored VAT rates on items like bread and restaurants, high wage growth, and potential price gouging during the currency switch. Historical data from other Eurozone entrants suggest a one off price increase is common. For instance, in countries like Slovakia, Estonia, and Lithuania, businesses capitalized on the currency exchange to adjust prices upward, particularly affecting basic goods in rural areas where competition is limited, with risks especially in sectors like retail, food, and services. Ireland's experience with euro adoption. A historical warning. Ireland's adoption of the euro in 2002 provides a cautionary tale for Bulgaria. When Ireland transitioned from the Irish pound to the euro, it experienced noticeable inflationary effects, particularly in the short term. Data from Eurostat indicates Ireland's Harmonisation Index of Consumer Prices, HICP, inflation rate rose from 4% in 2001 to 4.7% in 2002, with a peak of 5.3% in mid 2002. This spike attributed to price rounding, where businesses adjust prices upward to convenient euro amounts, and increased trade within the eurozone, which aligned Irish prices closer to higher European norms. Over the next decade, Ireland's inflation averaged around 2.5 annually and saw periods of volatility, particularly during the 2008 to 2009 global financial crisis, when inflation briefly turned negative, minus 1.7% in 2009 before rebounding to 2.6 in 2011. Over the past 25 years, Ireland's integration into the eurozone has led to sustained price convergence with wealthier eurozone economies, increasing the cost of living, especially for services and housing. While Bulgaria's economy differs significantly, being less developed and more price sensitive, The Irish case highlights the risk of short-term price shocks and longer-term convergence pressures, particularly for rural and low-income households. Increasing the money supply leads to more inflation. As proven time and time again, increasing the money supply increases inflation and the cost of living. Typically, large corporations get the cash injections first, as the working class drown in increased costs, unable to compete with whoever owns property and illegal migrants who receive free housing. ECB cash injections and the role in inflation. The European Central Bank, the ECB, monetary policies, particularly its cash injections, have influenced inflation across the eurozone, and Bulgaria's entry will expose it to these dynamics. The following is an overview of major ECB cash injection programs since the euro's introduction, based on ECB reports and economic analysis. Number one, the 2008 to 2009 financial crisis response, the covered bond purchase program. In response to the global financial crisis, the ECB launched the CBPP1 in July 2009, injecting 60 billion to purchase covered bonds and stabilize financial markets. This may have helped prevent deflation, but contribute to modest inflation increases in 2010-2011. The eurozone HICP rose from 0.3% in 2009 to 2.7% in 2011. Number two, the 2011 and 2012 sovereign debt crisis security measures markets program, the SMP. The ECB purchased 220 billion in government bonds from struggling eurozone countries like Greece, Ireland, and Portugal. This erased borrowing costs, but had limited direct inflationary impact, as inflation was already elevated due to energy prices. Number three, 2015-2018 quantitative easing asset purchase program, APP. The ECB's largest intervention. The APP involved 2.6 trillion euros in bond purchases to stimulate growth and combat low inflation. The eurozone inflation rose from 0 in 2015 to 1.8 in 2017, though it remained below the ECB's target. Bulgaria, indirectly affected via trade, saw its inflation rise from 0.1 in 2015 to 2.1 in 2017. Number four, 2022 pandemic emergency purchase program, the PEPP, to counter economic fallout of COVID-19. The ECB injected 1.85 trillion through the PEPP. This, combined with supply chain disruptions, drove eurozone inflation to 8.4% in 2022, with Bulgaria's inflation peaking at 14.3% due to energy costs. Number five, the 2023-2024 Transmission Protection Instrument, TPI, introduced in 2022 but activated sparingly. The TPI allows targeted bond purchase to prevent market fragmentation. Its impact on inflation has been minimal, with euro inflation cooling at 2.1 in 2025. So, Bulgaria's entry into the eurozone will expose it to future ECB policies, potentially amplifying the inflammatory pressures during periods of monetary easing. For instance, if the ECB responds to economic slowdowns with further asset purchases, Bulgaria's small open economy see imported inflation through increased trade and investment flows. A repeat of what happened in Ireland. Bulgaria's economy and inflation estimates. Bulgaria's economy, valued at approximately 103 billion In 2024, inflation is expected to reach 3.9 by the end of 2025 and 3% in 2026, with risks from wage growth, private and public wages rising significantly. These estimates account for price rounding, increased consumer demand from reduced transaction costs, and alignment with eurozone price levels. Rural areas where competition is lower may face higher price increases for basic goods like food and utilities, exacerbating cost of living concerns for Bulgaria's poor households. In conclusion, Bulgaria's adoption of the euro in 2026 uh, posing inflation risks. Drawing from Ireland's experience, where euro adoption led to short term price spikes and long term convergences, Bulgaria must prepare for similar challenges, particularly given its economic vulnerabilities. The ECB's historical cash injections highlight the broader monetary context Bulgaria will enter, where future easing will amplify inflationary pressures. For all the reasons mentioned, Irish patriots must oppose Bulgaria joining the euro. What is a HICP? Basically, how we uh, measure inflation in eurozone. It's a little bit different from the consumer price index because we have a consumer price index for each country, and then we have to harmonize it to make sense in a eurozone context. But it's the same idea as the consumer price index. It's just harmonized. I mean, like, there's economists that argue with this and say the way that we measure inflation and costs isn't very scientific. And I'm like, yeah, you have a point, but that's the data I have, and the data still says that inflation is going to go up. And some people say real inflation is going to be more than 3%. Um, when you take some housing costs into account. What is Bulgaria's current rate of inflation? I think for this year, this year's not finished. Uh, it could be around 3.6% because Bulgaria is now entering the eurozone next year. So what we predict it is happening and will continue to happen is that businesses will increase their prices for the euro. Like, so if the Bulgaria lev is pegged uh, to 0.99 euro, then you're going to have that one extra cent that's not accounted for. And when you're buying things digitally, you don't notice this, but nowadays businesses round up and you don't get your 1 cent back. So if something was that cost 99 cents will now cost a euro. So all that accumulates to massive price increases. So that's one way that increasing the money supply increases inflation. Any other questions? Not Stephen Fay. That's a good way to protect yourself legally. I am not Stephen Fay. I am not Stephen Fay, and so is my wife. Alrighty. So please, for the love of economic stability, oppose Bulgaria joining the eurozone. Aaron Gabara.